Good morning, traders, and a very happy Monday out there to you all. Hope that everyone had a nice weekend there in store and are all ready for this week that will be coming up in front of us. Right, and just before we go hopping into the charts, on the US side of the equation today, we're nice and light on the calendar. Of course, over the weekend there and overnight, we had the parliamentary elections, so some nice movement in that of the euro currency, the booms, and the DAX, which we'll all take a look at there shortly. But just good to note for our side of things, no major U.S. figures to concern ourselves with during our U.S. session there today. Of course, as the week progresses on, we have CPI and FOMC later on in the week, but just for today's purposes, that's what we're coming into the session with. All right. And with that said, we can also see we've kept it nice and contained during the Globex session. Our overnight range being 53.38 and a quarter, and 53.60 half from the overnight high. So relatively contained. We're also trading inside of our previous day's range from Friday's trading, which we'd certainly want to have on the sheets there. The low from Friday, which comes in at 53.29, just because it came in the form of a tail. So maintaining ourselves all right. And then the other item to take into account is that we're also trading right inside, putting in some good work inside of our range expansion bar that we had out of the 3 bar balance mode. Meaning that we did trade above it there on Thursday and Friday of last week, but didn't necessarily do a great job on closing up above that data point. And then likewise, when we came down and tested on the other side of that daily 5 SMA, we found some footing and closed ourselves up above it. So we've been kind of trading in between these two broader points. Also to note, we did have a set of 3 closes above the 5 SMA, then our 4, 5, 6. So, seeing as to where we closed today with respect to that daily 5 SMA should also be of good value. So that comes in at 53.48 even currently in the S&P. So we'd also want to take that into account more so on the daily display, just because we have had a handful of closes on one side of that. So we'd be interested to see if they keep up with that tone at all there today. So tested, early on, and so far keeping themselves, relatively well established, just trading inside of that bar from Friday. We come over here to the intraday display of data, such as the 120-minute chart. First thing we might want to note is the corrective nature here in the slow line, having corrected itself all the way here back to zero. And in terms of the action in the price, not too much damage done. We had that one spike down, so we were testing into somewhat of our low developed area here on the left hand side, but we didn't necessarily do a complete fill job. 53.13 and a quarter would have kind of brought us closer towards that point, so we've been faring okay. I do like using, however, this 53.39 is kind of being a nice important zone today, kind of like an over and under there in the ES, meaning, taking that out for a second time, getting some acceptance, we could start to gyrate towards that lower tail that we had left from last week, and otherwise keeping ourselves up above it gives a nice little ground to rotate around previous swing highs in there. So holding that point, we can just continue to rotate and maintain the advancement that we had there from last week. So like using that 53.39 in general there for our S&Ps as a nice little bit of an over and under type of zone there. So we'll keep that in mind. That's what we're working with on that 2-hour display coming into the session. We'll also take a quick look over here to the DAX future, just for comparison. We know we kind of had the similar balancing act, but in the case of the DAX, we did not get any range expansion that was sustained. We kind of did the failed breakout from 3 bar, brought it back inside, and then we tried out the other side of the equation. So we did a test tail, and we've already been coming back up. It was above the 18,402. So back above the previous day's low. DAX clearly a bit different from the tone on the S&Ps. You look over onto the left-hand side, we can see this is the top of a previous congestion zone that we had put in there in the DAX. Not quite exactly to the spike high tails of it, but in terms of like the bodies of the bars, this 18702, or rather 18402, kind of shows up as the top portion of this previous price bar overlap congestion zone there in the DAX. So I think that should serve us well on the daily display. Coming in here to the 120 minute. The zone I have marked off down below here, I have it just in front of that 18405, this 18435, right? Initial cycle low. We put in some closes of the bars there. We did leave a tail through it, and now this is our
third time coming back into this zone. I am viewing this as being kind of a two-part wave on its reaction. Right, a little bit of this ABC down wave structure. We've already made some good progress. So on any counter-reactive lift, 18,549, this 120-minute moving average may just serve as a little overhead resistance there for that of the DAX. Since we already had some good testing down overnight, for now they're just working on a bit of a relief lift there, but we still have some overhead points of interest. You can also kind of see between that 120-minute moving average and the 5 SMA, they come in relatively close to each other, just about 20-25 ticks apart. So like combining those two. And then moving on along outside of our index future category, we have that of the euro currency, which of course had a bit of a gap down in its overnight session from the reopening. Right, taking into account the data and the election results, the poll results. But what did we know we had on Friday there with the euro currency? Well, we had our breakdown from 3-bar balance mode. Right, this was our bar on Thursday. Right, it was beneath the 2-day high, above the previous day's low. So we have range expansion down from balance. As we know, good odds favor a small degree of follow through, or at least the trade towards that low on the following day. In this case, we gapped beneath the previous day's low, so a little bit more of an extreme case for sure. However, 1.07960, a pretty large pivotal zone there for the euro currency, because we did ultimately come in and make our full test up. So coming in now and taking out that point, looking beneath or gapping beneath the 1.0 is quite a sight to be seen there in terms of the action in the euro currency. We do have congestion on the left hand side from when we had made our slow churn to the upside, our several pullbacks and little continuation patterns that we had forming along the way. So we gapped down right kind of in the middle of this broader swing that we had there with the EC. If we pull into account our intraday charts, our intraday data rather, 1.07405 cycle low, we kind of bolted down there fairly quickly. Then of course, right on the other side of the equation, right, we have the gap area that we would have left from overnight. So I can actually take this data point and just bring it down there a notch. Originally had it here previous little swing low up there right in line with that 1.08, but since we did have a gap down and that comes in front of it, this 1.07855 would be a notch of a hurdle there in the euro currency, or we could say the start of its gap area there. So for now, we're working on counter-reactive lift. We've already worked off some of this loss of momentum on the hourly charts. So you'll see 1.078 kind of ties in with that hourly moving average, which likely on the first try up would provide a little overhead for them. So a nice extreme case though, gap down in the euro currency. We're up off of the low, but we have a ways to travel before entering into the start of the gap area. Alright, and yes, certainly very much so, very unusual to have gaps in the currencies, especially after having time in the Globex session to kind of sort themselves out as well. We could very easily, worked back a little bit more of that, but it certainly proceeded to get a pretty decent degree of follow through overnight there. So certainly a lesser frequency of occurrence there, seeing a gap in these futures coming into our morning sessions on the following day. Next in the queue here, we have that of the gold, right? And this is going to be out here on the 240-minute display. We know gold also gave it a one healthy range expansion bar on Friday, so could to some extent be on guard for any type of consolidation or Z-day type of activity, just because we did have pretty good degree of trendiness. But with that said, off the bat, of course, the levels that stand out to us there are going to be the 2308.7. That was the previous swing low here in the case of the gold. We already well maintained ourselves and didn't ever look back on the 2335.1, and we knifed through it. Those were 2 data points that we had there, so we sliced through it fairly quickly, and we have the same exact zones here on the 240-minute display, right? In terms of the 2308.7, the 2335.1. Okay, I have it 34.8. It's just using this other swing low. Same exact idea though. 1 data point, 2 data point. So as we have a little counter-reactive lift in the gold, it's going to be overhead for us, right? Resistance, because there are 2 separate tests in that area coming on separate time periods for that matter as well. So we see that on the daily chart, major damage that was done. We're nowhere near retracing more than 50% of that big bar. So as we come up, that's one component, right? That's going to be overhead resistance. But two, also want to be on guard for forming any additional continuation patterns or bear flags in the case of the gold. But so far, all right. We did hold the previous day's low from the range expansion bar, not by very much, but shows up as just a slightly higher low. So a bit of a failure test that's already kind of being worked off before coming into the session. So if we zoom this in just a notch more, you can see we did a little overlapping structure up there. So not pure form of a single prince. However, that one test, two test will be valid and will be quite a hurdle there coming back up towards that point there in the gold. Alright, speaking of hurdles, we have the crude in a similar category here, one that has sustained its counterreactive lift with a tad more substance. We can recall the 76.15 there from last week, which we had done some trading around on Friday. However, we did not close quite above that point. We did trade up above it, found some, initial footing, and then backed off before the day was through. So into that same zone, we were also filling in some structural work, or some of the single prints that we had originally to the downside when we were making this nice impulsive move. So we filled in a good batch of them going up to the 76.15, and now we're getting the remainder of them out of the way here in the Globex. Take this little tail here, you plot it just like that. 76.39 would give us, essentially what would be the complete fill there in the case of the crude. So coming up into this zone is all right. The blue box is to indicate the same type of rhythm, right? Filling in the single prints. Okay, so that's all fine and well. We corrected this 120-minute slow line all the way back to 0. And for now, we're coming into the session a little bit marked up here. We have the test above the previous day's high. So in general, really like using the 76.15 as a pivotal area for that of the crude. Meaning getting some acceptance above it, could be constructive. We could start to work towards this next series of price bar overlap that we had. Or on the other side of the coin, if we can't quite maintain ourselves up above that, we can continue to rotate and do some price bar overlap to help digest as well this nice upside progress that we've had over the past 3 trading days, 3.5 now, right? Just in terms of the way we came up off of the low. So that's where we're coming in with there on the crude. And then lastly here we have the bonds working themselves back with some good definition there as well. I had quite the showing there in the early portions of last week, and then we tapered out and then had our nice range expansion bar to the downside as we did with gold and some of its other counterparts. So here in the bonds, we can also note we're working back a good portion of this retracement that we had from low to high. This area was quite impressive, right? Went from 114.13 all the way up to 119.31. So we already given back well more than half of that whole swing. So a little rejectee up there in the case of the bonds. Utilizing our nice 120-minute display here. As we know, on Friday we had the baby B formation. All the damage was done morning session and from the data. Right, so impulse down, consolidation lower, and now at this stage here we can look over into the left hand side. What do we see? We see that we're entering into some lower developed areas here in the case of these 30-year bonds. However, it's a fairly wide zone for them. In other words, really the bottom of that takeoff point doesn't come in until 116.17. So a little bit of a ways to travel for them. This will be their second day of high to low, but also we are coming off of a pretty impulsive move there to the upside during last week's trading. So good follow through from the range expansion down bar there on Friday, and we'll see as to how they want to handle the rest of these single prints, or low developed zones that show up there on the 120-minute display. And with that said, I'm going to dial a couple things back. Let's get these charts back in order so we're all ready here for this morning session in front of us.